Hello guys, as we have said earlier, we Infinity IAS Academy from Pune are launching previous year question paper analysis topic wise as we are about to start today the topic that is money and banking previous year question papers. As prelims is near, it is approaching almost 17-18 days are there for UPSC prelims, but you need not to worry for the same because as we are here the solution and strategies regarding the prelims 2022. Now let us see the previous year question papers. See the first question: in India, which of the following have the highest share in the disbursement of credit to agriculture and allied activities? Now see the keywords, always identify the keywords of the question, and the keywords are disbursement of credit to agriculture and allied activities. These are the keywords. Now for the agriculture and allied activities, if you go through the options carefully, one of the best technique to solve the previous year question paper is that always go through the options. Remember guys, it is not the question which is tough, it is the options which make the question tough. So here if you go through it and analyze properly, you will understand that microfinance institutions cannot be the option, cannot be the answer, because it is recent development. Regional rural banks, cooperative bank and commercial bank, if you see these two options, the quantum of cooperative banks and regional rural banks as far as disbursement is concerned, it is not that much high. So you can eliminate these two options and then you will definitely get the answer, that is commercial banks. So this is how you have to solve the question in this way. Use knowledge first thing, second thing analyze, put your logic, analyze the options and then go for the answer. Your chances of accuracy increases. Next question: the lowering of bank rate by the Reserve Bank of India leads to. Now this was the Civil Services Prelims 2011 question. Here again lowering of bank rate is the keyword. Now lowering of bank rate, what will happen if RBI releases lowers the bank rate. Now see here, more liquidity in the market, less liquidity in the market. Now no change in the liquidity in the market, mobilization of more deposits by the commercial banks. Whenever there is an increase or lowering or increasing the bank rate or any kind of quantitative measures of RBI, there are two important things, that is lowering and increasing. So RBI with the monetary policy does this. Whenever it lowers, it is called as cheap money policy. And when cheap money policy is there, there is more liquidity in the market. So remember, it is a conceptual question. You should know the concept, you should know the quantitative measures of RBI of credit control, then you can answer the question in a very simple manner. Now next question: why is the offering of teaser loans by commercial banks teaser loans cause of economic concern? Now you should know the concept of teaser loans. Teaser loans are considered to be an aspect of subprime lending and banks may be exposed to the risk of defaulters. Yes. What is teaser loans? Teaser loans are that you are given loans initially at very low interest rate and then interest rates are increased. This is the concept of teaser loans. So first statement is correct. In India, the teaser loans are mostly given to the inexperienced entrepreneurs to set up manufacturing or export unit. That is why there is a possibility of defaulters in near future. And so the second statement is also correct. One more trick I want to give you here, guys, that is nothing but whenever the statement is quite simple, straightforward, there are no extreme words in the statement, the chances of the statement that the statement is correct is quite high. So both of the statements are correct. So hence The answer is both 1 and 2. Now next question. The Reserve Bank of India acts as a banker's bank, RBI as a banker's bank. This would imply which of the following? First, other banks retain their deposits with RBI. Second, RBI lend funds to the commercial banks in times of need. Yes, it is there. The RBI advises the commercial banks on monetary matters. If you go individually, all the statements are correct, and hence answer is D, that is 1, 2 and 3. This is again conceptual question. Functions of RBI. One of the function is that it is banker's bank, and whenever we talk that it is banker's bank, it maintains these three functions of RBI. Now, which of the following measures would result in an increase the money supply in the economy? What measures would result in an increase in the money supply? See, purchase of government securities from the public by central bank. Second, deposit of currency in commercial banks by the public. No, it is not, because deposit of currency in commercial banks by the public, that would not increase the money supply, rather it will decrease the money supply. So option second eliminates here. Option second eliminates. So you are left with option A and option C. Always go by elimination method. Since this is all India level examination, do not expect to be an expert of this subject. Just try to qualify the examination. Your answer should be correct. Your way to go to answer should be correct, and that matters a lot. Here, see the first statement. Now it is quite obvious in both of the options 1 and 3, 1 only. It means that statement 1 is absolutely correct. Now we have to see the statement 3. Borrowing by the government from the central bank. Obviously, whenever government borrows from the central bank, it infuses the money into the market, and if it infuses the money into the market, that will definitely result the money supply in the economy. So answer is C, 1 and 3. Question number 6. Basic aim of lead bank scheme is that big banks should try to open offices in each district. There should be stiff competition among the various nationalized banks. Individual banks should adopt, now this is what, individual banks should adopt a particular district for intensive development. This is called as lead bank scheme. Lead bank scheme is nothing but, it is a recommendation by Narayan committee, and this scheme was launched in 1969 on the recommendation of Narayan committee, as we studied. And the focus or the prime objective was nothing but an individual bank should adopt a particular district for intensive development, and they should go for the all credit supply activities in the rural sector particularly. For that purpose, this bank was established. An increase in the bank rate generally indicates, now again increase in the bank rate, that is what actually, as we studied in the last question also, previous question also, that whenever it happens, central bank is following a tight money policy. Remember the keyword. Whenever there is an increase, there is a tight money policy, and tight money policy, which is also called as dear money policy. And if the same question, if it would be like that, if there is a decrease in the bank rate, then only difference is that there would be an option of cheap money policy. Very simple. RBI or monetary policy, in a sense, is quite an important topic in the previous year question papers of UPSC prelims. Now next question. Priority sector lending by banks in India. Priority sector lending. This is the topic again. Now see, what do you understand by priority sector lending? So agriculture is a part of it. Yes, it is part of it. Micro and small enterprises. Yes, it is part of it. Weaker section or vulnerable section of the society, it is also part of it. So the answer is obviously D, that is all of the above. Question number 9. Which one of the following is likely to be the most inflationary in its effect? It might happen in such kind of questions the two options might be inflationary, but they have asked question, you should read the question very carefully, the most inflationary. From my point of view, while qualifying or to qualify civil services prelims, you need to be very alert while reading the question. Now see, repayment of public debt, borrowing from the public to finance budget deficit, borrowing from banks to finance a budget deficit, creating a new money to finance a budget deficit. This is dangerous. If you are going by this way, then it is most inflationary effect, right? This is the last option. Normally when there is a very deepening of crisis, then this kind of options are used, like creating a new money to finance budget deficit. Otherwise rest of the options are used to make the things clear. Next question. Which of the following grants or grant direct credit assistance to rural household? Now see the word again, I used, read the keywords, direct credit assistance. Here is direct credit assistance. Now see nobody of you, neither me nor you, nobody goes directly to NABARD for having loans. As you know it very well, NABARD doesn't give us direct loans. They give to the cooperative banks, they give to RRBs, and then those banks give to us, right? So we are not direct beneficiaries of loans of NABARD. We are beneficiaries, but we are not direct beneficiaries. Remember carefully. So second is not there, and if second is not there, then you are left with only one option, elimination technique. If you are sure that second is wrong, then you are left with only one option, and answer is obviously B, that is 1 and 3. RRBs and land development banks give direct credit assistance to rural household. I hope you got it clear. Next, consider the following liquid assets. Okay, the liquid assets have been given. The first is demand deposits with bank, time deposit, then saving deposit and currency. Correct sequence of these assets, decreasing order, means it has been asked that what is the highest percentage that will come for the first. If you analyze it carefully, you will understand that currency should have the higher proportion, and if that is the case, then you are left with option number B and option number D only. You should know only. Now here are you are in 50-50 league. Now this is very interesting thing. Once you are in 50-50 league, you have to take the chances, guys. Never expect that you will be utmost sure of the answer. In civil services prelims, there will be always confusion. You have to bring down your chances of that answer should be more correct. Then how it will be correct? Now you are with 50-50, 4-3-2-1, 4-1-3-2. So here is 4, then you have first is what actually? Demand deposits. Second higher proportion is demand deposit. So answer is obviously 4-1-3-2. Even if you don't know about 3 and 2, still you can get the answer. That's it. Question number 12. The Reserve Bank of India regulates the commercial bank in matters of. Now, in other words, you have been asked that what is the function of RBI as far as commercial banks are concerned. See, liquidity of assets, obviously it is there. Branch expansion, yes, RBI permits for branch expansion of commercial banks. Merger of banks, if RBI thinks that the particular bank is in bankruptcy stage or that has gone bankrupt, then it might merge the bank. Winding up of banks, that may also happen. Sometimes that if a particular bank is found to be in the malpractices, then there is a winding. So all is the answer. Last one. In the context of Indian economy, open market operation, as we have spoken earlier, what is open market operation? That open market operation nothing but it refers to purchase and sale of government securities by the RBI. Now this was very simple question. If you have studied monetary policy carefully and particularly quantitative measures of monetary policy, that is quantitative measures of credit control, then you can easily answer this question. Question number 14. The term marginal standing facility and net demand and time liabilities, sometimes appearing in news, are used in relation to what relation? Now these kind of questions are like very simple questions. We can call it as lollipop questions. You can easily solve those questions because banking operation is the answer, and here if you make mistake guys, then it's time to worry. But you cannot, I am sure that you are pretty mature enough to understand these concepts, because since they are in the news, it is related with the banking. Answer is banking operation. Now what is the, or what are the facilities, what is the, or what are the facilities the beneficiaries can get from the services of business correspondent, that is bank satis, in branchless areas, branchless areas. Now see, first option is it enables the beneficiaries to draw their subsidies and social security benefits in their villages. Yes, it is true. It enables the beneficiaries in the rural areas to make deposits and withdrawals. Yes, that is why they have been appointed. Bank satis are nothing but, bank satis are what? What is bank sati? Bank satis are to assistant the branches or the banks particularly. Wherever banks are unable to reach, I mean it makes the consumers easy, banking operations easy for the consumers. With the help of bank satis, they can open their account, they can take benefit of social security benefits, and that is why the answer is both 1 and 2. So all in all, if you study all these topic, all these questions of this previous year prelims, money and banking, which is the topic actually what we studied, the topic number 1, that is money and banking. This topic, it carries too much weightage in the last 10 years, 2011 to 2021. The questions asked on this topic are near about 44 to 48. So remember carefully, the weightage on an average every year 3+ questions, at least 3+ questions are there everywhere from this sector, money and banking. And also in this topic, in money and banking, if you study carefully, then you will understand what is asked in the examination or what is the focus. Focus is monetary policy. Focus is monetary policy. So before going for prelims 5th June 2022, even if you go through the quantitative measures of the monetary policy, quantitative measures of monetary policy, still you can easily solve the questions based on it. Like say for example, what are the quantitative measures? In a rapid mode, we'll take it one by one. That is, first is bank rate. Bank rate, these are quantitative measures. Second is repo rate. Third is reverse repo rate. Reverse repo rate. Fourth is SLR, that is statutory liquidity ratio. Fifth is CRR, that is cash reserve ratio. Sixth is open market operation. Seventh is marginal standing facility. Okay, all these concepts, and all these concepts are nothing but quantitative measures of credit control of RBI. If either or any of these rates is increased, that is called as tight money policy. If rate is increased, tight money policy. And if any rate is lowered by RBI, any rate is lowered by RBI, that is called a cheap money policy. So this is the topic of money and banking, and these are the 15 questions as we have taken today. Rest of the questions, that is, there are, as I said earlier, 45 to 48 questions are there in totality, and those questions we will take one by one in the upcoming sessions. As from today onwards, we will deliver, or we will give each day we will post a video regarding the explanations of previous year question papers. If you have any questions or queries regarding this, you can contact Infinity IAS Academy Pune. For branch inquiry, you have the here call on 9022983212. Thank you so much guys for today's session. Thanks a lot.